Hey there, imagine this. You're Warren Buffett, the 94-year-old Oracle of Omaha, sitting on the kind of cash most of us only dream about. $325 billion to be precise. That's more than the GDP of some entire countries. So, the question is, what's Buffett doing with that massive cash pile? Spoiler alert, it's not to finally buy himself that private island or a shiny new yacht. Today we're going to break down Buffett's latest moves, what they mean for the market, and maybe even what they could mean for the future of Berkshire Hathaway. Let's dive into the mind of the world's most famous investor.
This question's from Johan Halen, who writes, "You're sitting on $168 billion of cash, which you told us today is now more than $182 billion. His questions are, one, what is Buffett waiting for? And two, why not at least deploy some of it?"
Well, I think that's pretty easy to answer. I don't think anybody sitting at this table has any idea of how to use it effectively, and therefore we don't use it, and we don't use it now at 5.4%, but we wouldn't use it if it was at 1%. Don't tell the Federal Reserve that, but prefer it. But we only swing at pitches we like, and if anybody tried to swing at every pitch, or felt that because they hadn't swung at a pitch for the last two pitches, they ought to swing at the third one or something like that. There are times, and obviously, but I would say this: I would not like to be running 10 billion now. 10 million, I think Charlie or I could earn high returns on, because I think there are just a few things that happen on a very, very small scale. But if we had 10 billion, I wouldn't basically see many more opportunities than we found. Now, it's true that something like Japan we could have done if the company had a 30 or 40 billion, and we'd have had great returns on equity. But if I saw one of those now, I'd do it for Berkshire. It isn't like I'm got a hunger strike or something like that going on. It's just that things aren't attractive, and there's certain ways that can change, and we'll see whether they do.
All right, first things first, Apple. We all know it, we all use it, and let's face it, some of us are obsessed with it. Buffett made his biggest ever profit investing in Apple, and now he's actually selling it off. I know, crazy, right? So why would he be walking away from the iPhone cash machine? When Buffett first dipped his toes into Apple back in 2016, people thought he'd lost it. A tech company? But Buffett saw something unique, a loyal fan base. People who buy iPhones aren't about to switch to Android. At one point, Berkshire held $178 billion worth of Apple shares. And here's the kicker. They bought in at $25 a share, and today, Apple trades over 200. Cha-ching, talk about getting in early. Awk. But now Buffett's selling. Why? It comes down to price-to-earnings ratios, or PE ratios. If that sounds like finance gobbledygook, think of it like buying a car. If a $20,000 car suddenly costs $60,000, that's another story. Apple's stock, in Buffett's view, is like that car. It's gotten a bit pricey. Apple's PE ratio has ballooned to over 30 times projected earnings. So Buffett did what he does best. He sold some shares, locked in a $97 billion gain, and kept some cash on the sidelines. That leads us to the big question. What's with all the cash, Warren? Right now, Berkshire Hathaway has a record $325 billion just sitting there. That's more cash than Amazon, Google, and Coca-Cola combined. So, why isn't Buffett, a guy famous for making big, bold investments, putting that money to work? One reason could be that Buffett's playing the long game here. He's preparing Berkshire Hathaway for its future without him, and he's chosen Greg Abel, a longtime executive, to take over. Leaving Abel with a giant cash pile gives him flexibility to invest, grow, and weather financial storms without risky assets. It's like Buffett's leaving an emergency fund for Berkshire Hathaway's next chapter. Now, here's a fun bit of Buffett trivia. He's known for jumping in when the market's tanking. He's a fan of value investing, basically scooping up undervalued stocks and holding on to them, like picking up vintage records at a thrift store and waiting for them to be cool again. Remember the 2008 financial crisis? Buffett stepped in like a Wall Street superhero, investing billions while everyone else was panicking. Right now, though, the market is steady, but a lot of stocks are, in Buffett's view, too expensive. Instead of buying, he's parking his cash in short-term U.S. Treasury bills. Think of Treasury bills as a super-safe piggy bank. They're not flashy, but they're a safe place to stash cash until a more attractive opportunity comes along. Here's another twist. Buffett's massive cash pile could be a sign he's predicting rough times ahead. By holding cash, he's ready to buy low when other investors are forced to sell at a discount. In Buffett's words, be fearful when others are greedy and greedy when others are fearful. Other big investors like BlackRock and Blackstone are pouring billions into data centers and private credit, but Buffett's keeping it simple. He's not locking up Berkshire's money in exotic investments, he's sticking with cash and high-quality bonds. Think of it like a high-interest savings account. Not flashy, but it's there when you need it. And let's not forget the size factor. Berkshire Hathaway is a trillion-dollar giant, and that kind of size limits what it can invest in. Smaller stocks just don't make a big enough impact. It's like trying to fill a swimming pool with a shot glass. It would take forever. For Berkshire to grow, it needs investments that can actually move the needle. The next Apple would need to be huge, likely in tech or renewable energy. And finding a company of that size and quality? Not so easy.
Steve Kovac is outside the company's headquarters in Cupertino, California, with what to expect. Steve?
Hey there, John. Yeah, and today it's going to be our first read on iPhone 16 demand. That's what everyone has been trying to game out, especially how Apple Intelligence is going to factor into that demand picture. Now, this report is going to also reflect the first several days of iPhone 16 sales. That'll give us a hint, at least, how much it's been comparing to the initial iPhone 15 launch last year. And also, since the iPhone 16 launch, the street has really been trying to figure out what sales look like, and it's not been a pretty picture so far. Let's start with analyst Ming-Ching Kuo of TFI International Securities. He said earlier this month Apple cut 10 million iPhone 16 orders, which is more than usual for this time of year. But Apple Intelligence just launched on Monday, and the question now is, will that demand picture change now that Apple's artificial intelligence system is finally here? Still, that super upgrade cycle the bulls have been predicting for months now, it could take longer to happen. That's because most of the AI features Apple's been talking about for the last several months, they just aren't ready yet. The big stuff that everyone's looking forward to, ChatGPT integration, updated Siri, and integration with all your apps on your phone, that is coming over the next several months, even into 2025. And by the way, John, besides the iPhone, pay attention to services. That business is really booming again after a post-pandemic slump. Apple said to expect services to be up double-digit percentage points again in this report. You see services picking up some of the slack from the iPhone business, John.
Yeah, Steve, hopefully we get some clarity. There seems to be every week a different analyst report, bullish, bearish, about iPhone 16. But even on this issue of potentially orders being cut, we don't know what the starting point was. How many of these 16 phones Apple made in the first place? If they made a whole bunch going into sales, then maybe an order cut isn't that big of a deal if they're expecting a different kind of ramp with Apple Intelligence coming out, right?
That's exactly right. I'd also note that Kuo said in his note that these are the most of those cuts are for the regular iPhone 16, not the Pro, which is another good sign for Apple because obviously they make more money off of those Pro models. Those are the ones they advertise the heaviest. Those have the best and latest and greatest cameras and processors that are also capable of doing this artificial intelligence stuff. So that is another important factor to go in. The other thing is, as we started getting these demand signals early on since the iPhone 16 launch, is whether or not, like you said, maybe supply is actually better this year. We've seen in past years, Apple had to kind of work through those COVID supply chain issues. Those have largely cleared out. They're also adding capacity to build iPhones in countries like India, for example. So that could be helping balance that demand picture as well. We won't know for sure until we hear from Apple, though, tonight, John.
I suspect that if you happen to see Tim Cook around there today, you'll ask him about some of that. I don't know. Something tells me
I think so.
That could happen.
He might be wandering around behind me. We'll see.
Steve, thanks.
So where does that leave us? Right now, Buffett's sticking with cash, positioning Berkshire to thrive under its next leader, Greg Abel. He might be 94, but he's setting up Berkshire for the long haul, and Berkshire stock is up 25% this year. Proof that people still believe Buffett's got one more big win left in him. Buffett doesn't chase trends or get caught up in market hype. He does his own thing, stays patient, and lets time do the heavy lifting. In his own words, someone's sitting in the shade today because someone planted a tree a long time ago. Right now he's planting seeds for Berkshire's future, even if he might not be the one to see them grow. So what do you think? Is Buffett just waiting for the next big deal, or is he bracing for a rough market ahead? Could the next Apple be lurking out there? Let us know in the comments below. And don't forget to hit subscribe for more knowledge drops that take you behind the scenes of the financial world. Until next time, stay curious, stay savvy, and keep dropping knowledge.